Welcome to day 17 of our Quick Strike video series in February. I appreciate you coming back. Today we are going to review what we've covered so far just from a menu structure standpoint. So in case this is the first video you're watching, you know that you can go back and find other information that you can watch in order to educate yourself about Quick Strike. And then we're also going to cover a section of the Vol Tools menu, the Vol Spread and the Cross Product Vol Spread Calculator. Okay, so first off, as a reminder, in one of our earlier videos, we talked about what all these different buttons do for you as part of the professional license. And we also covered the usage of some of the icon buttons over here, as well as the welcome message that shows you my account support and the ability to log out. We have looked at the market dashboard pretty much in its entirety, the intraday activity section, futures info. We have skipped contract summary to this point because we are waiting for the latest version of that, and then that should be something we see early next week from a video standpoint. Pricing sheets, we've covered standard sheets so far. Pricing tools, you looked at the calculator as part of the pricing sheet, and trade builder we've also covered. Calendar builder we'll look at sometime in the future. Analysis tools is yet to come. We've covered this column of the vol tools, the vol info section, and we'll cover these two today. Probably not going to mess with this so much because this is going to be deprecated soon. We haven't looked at risk tools. We haven't looked at option matrix because like the contract summary, we're waiting for the next release of that, which I think you're going to like a lot. And then we've looked at managed quick strike, but we're probably going to review this again just as kind of a smaller example. So anyway, that's the review of where we've been. So for today, let's concentrate on the vol tools and the spread calculators. Both of these are in terms of volatility spread. So first of all, let's look at the vol spread calculator. And what you're going to notice is that this is in reference to a single product. Okay, so currently, as we've always talked about, this is our analysis bar. So we can see the different amount of time that we're going to look at as part of this spread. We can determine what spread value we're going to look at, volatility, daily, annual BP, and Black-Scholes volatility. Generally speaking, these are going to come into play only with the interest rate products. So for non-interest rate products, we're going to just leave it at the volatility. Use at the money. What this checkbox does is if you check this, it's going to default to whatever the at the money history is for each of these expirations. If you uncheck it, then if you make a selection over here, when we finally do build our spread, it's always going to stick to the strike that you have here selected in the drop down. So generally speaking, when I'm looking at comparing volatility levels across expirations over an extended period of time, I'm specifically looking at the money volatility. So I recommend that being checked. We probably should default it to make it a little bit more straightforward, but then these would be grayed out and people might be confused, so we don't do that. And then finally, expiration group filter. This is what's going to show in this list to the left. So generally in corn, this is where most of the activity is. Some in the weeklies, short dated, there are some, but I like to keep this list as short as possible when I'm working with the tools only, so I don't have to scroll back and forth and I can work within the framework of a single page. Okay, so we're going to leave it at that first expiration group, which is showing everything that trades in this calendar year. Okay, so let's get started with building a simple spread. So an interesting one that somebody talked to me about recently was the March December. I'm sorry, the March September spread. So I'm going to buy the March and sell the September. Or let's do it vice versa. Let's sell the March and buy the September. Now, this is a little bit interesting because we're so far down in days to expiration here. So it's obviously going to spread out quite a little bit as that happens. But the interesting part of the spread, just from reviewing it previously, starts to take place about 30 to 40 days to expiration for the March contract. So why don't we just take a look and see what happens? So I'm selling one of the March options and I'm buying one of the of the September contracts. Typically, when you're building a spread, you're doing it one-to-one. Just makes it easy. It's just looking at the straight volatility value spread, okay? So when you're done selecting your spread as part of the grid, you can hit the calculate button. And what you're going to see is the following. So the top level chart is going to show you the charts, the line charts for each of the volatilities. So in yellow, in this case, we have the March, and in red, we have the September. So as I mentioned, as you start to get out, we can go down here and look about January 19th, January 11th. We start to see a pretty big change in the spread. Okay, so the front month volatility got hammered pretty good in the back month. The December contract stayed pretty steady from where it was. So this is in this case, I sort of knew what to expect over here in terms of the spread, how it was going to play out for us. But this is a great way to go and keep track of spreads, investigate spreads. If you see something that's a little bit out of line, you could take the time to investigate here and see what you think and see if there's a trading opportunity. So this is going to give you the outright values for the volatilities for each of these expirations. Below here is going to give you the spread. So obviously we're buying the one and selling the other. So we're seeing that it went from basically sort of around a 0 level, maybe a little less, and then trending somewhere around the 3 mark. And we really had a pickup in terms of what that spread looked like over the course of a 2 or 3 week period. Okay, so outright volatilities and then the spread itself. And then for good measure, we always put the futures contract in there so you can take a look and see if anything interesting in terms of the underlying occurred in order to bring some of this about. Okay, and then finally down below we have spread summary or some statistics about what we're looking at, and here we have an evaluation day. So that's saying how many trading days are in this 6-month period. A last value is telling you, where this last guy is here. It's got the mean, which is the dashed line. It's got the off average, okay, which is telling you the difference between the two, the median, which is actually that we have the median as well. And then we have the standard deviation, which is going to give you this band here, okay? So, and then we have the high and the low, and you see the high took place day prior, and the low took place way back here in August. So again, we have the volatilities, we have the standard deviation and the mean value, okay? And then how we vary around the mean and whether it's inside or outside the standard deviation from a spread standpoint, and then the other statistics around high, low, and all that kind of stuff down here, and when those actually occurred. So a lot of information in this simple chart. Again, right now we're showing the 6-month contract, but you can see 1, 2, 1, 3, 6, 9, and 12 months here at this point. Okay, and as a reminder that we check this box to say use the at the money strikes. Okay, use the at the money strikes. If we don't check that box, then we can specifically track history of a strike versus a strike. So a strike's history versus a strike's history, regardless of whether it is at the money. Now you may very well do a put spread, right? And then you might want to track that put spread's volatility spread as well. So you can do that. In this case, we're looking at the money, and essentially we're looking at the straddle spreads, right? So it's just an idea, a way of giving you what the levels are in the market for those two contracts in comparison. Okay, so this is the tool I generally use when I'm doing an intra commodity spread, meaning I'm just doing something within corn itself. Something that's very similar to this, but lets you do intra and inter commodity spreads. It's a cross product spread calculator. Interface is a little different. This one occurred a little later on, and it's not quite as easy from a building it standpoint, but it is much more flexible in terms of the fact that you get to go cross product here. So let's just do the same spread that we did previously. So let's go down to OZCH and let's sell that guy. And let's go down to OZCU, okay, and buy that one. And then down here you see where my settings are. So I'm going to do 6 months. I'm going to use my spread value of all. In this case, we have a spread calculation of a ratio or a spread. So when you do a spread like we did before, I'll show that, and then I'll show the difference between the ratio. And then I'm going to use the at the money again, okay? And I'm going to hit calculate, and we should see something very similar to what we saw before, and we do. We see pretty much the same stuff, right? Vol chart, spread, and then what the futures look like. Now let's turn on this ratio and calculate this and see what we get. So now we're going to see is how these are related to each other from a volatility standpoint, right? So we have one over the other, and then we have, instead of having a spread, we actually have the ratio. So if we go look down here, we see that it's less than 1, which is this top one is is the numerator, and this bottom one is the denominator. So that's where we're seeing that that March is much less from a from a from a from a ratio standpoint, as opposed to if it's 1, that means they're the same, right? And as it goes lower, that means the top one's going to get um, is smaller than the bottom one. If it's higher, then the bottom one is smaller than the top one, and it's usually this is the order: top, bottom. That's how it's looked at. Okay, so there's both spread and ratio value here, a little bit more flexible. Finally, the other nice thing you could do here is let's go with the spread here, and let's do a wheat contract. Okay, so if we want to look at the March wheat versus the corn wheat, and we buy that one and we hit calculate, now we can see what the vol spread looks like across commodities here. So now we have an intercommodity vol spread. So again, depending on what you're looking at, depending on what you're trying to track, you can also see how two different products are going to react to each other. Now you're not limited to, ag within ag. If I wanted to look at a U.S. rate versus a wheat contract, you definitely could do that. I don't know how relevant that is. I mean, I haven't seen anything like that, but the whole point is you can do cross product spreads. Okay, so I hope that that has been helpful. Again, vol spread calculator is generally for working within a single product. Okay, and then cross product spread calculator, I explain it like this: you work within a single product and you want to perhaps see the ratio instead of the spread. You can come over here and do that, or you're going to work between two different products to see how the vol spread or vol ratio looks. And when you're doing the ratio, remember it's always the top guy over the bottom guy. Okay, so that's it for now. If you have any questions about the vol spreads or anything else, please feel free to give us a holler over here on the support form. Thanks again for watching. We really appreciate you taking the time this month to go through the videos. As I mentioned, there's 12 more coming for this month, and we'll continue to do regular videos, just even with little small things as we go throughout the year. So if you have any questions, let us know. But thanks again for taking the time. Talk to you soon.